Hey everyone! Welcome back to Wall Street Wisdom, your go-to channel for smart investing, market insights, and making your money work for you. Today, we're tackling a big one. Is a recession coming? You've probably seen the headlines, heard the warnings, and maybe even felt a little nervous about what's next for the stock market and economy. But is all this fear justified? Or is this just another overreaction from Wall Street? Let's break it down. Now here's the deal. There are a lot of red flags flashing right now. Interest rates are up, inflation is still hanging around, and consumer spending is starting to slow. Not to mention, corporate earnings are starting to show signs of weakness. When you put all these factors together, it's no wonder that investors are on edge. But does that mean we're definitely heading into a full-blown recession? Not necessarily. First, let's talk about the biggest indicator that has everyone worried: interest rates. The Federal Reserve has been raising rates aggressively to cool down inflation, and historically, when rates go up this fast, something in the economy breaks. Higher rates make it more expensive for businesses to borrow money, which means slower growth, potential layoffs, and weaker earnings. If rates stay high for too long, you could absolutely see a recession. Then there's consumer spending. The US economy runs on consumer spending, and right now people are feeling the pressure. Credit card debt is at all-time highs, savings rates are way down, and many Americans are relying on credit just to cover basic expenses. That's a recipe for an economic slowdown. And let's not forget the job market. Right now, unemployment is still relatively low, but we're seeing layoffs ramping up, especially in tech and finance. If job losses start spreading into other industries, that could be a major warning sign that a recession is right around the corner. Now let's talk about the markets. If you've been watching the stock market lately, you know it's been a roller coaster. One day it's up, the next day it's down. It's all over the place. That's because investors are trying to figure out what's coming next. Are we heading into a deep recession, a mild slowdown, or could we actually avoid a crash altogether? Here's the truth: not all recessions are the same. Some are brutal, like 2008, while others are more like a temporary slowdown. A lot of experts believe that if we do get a recession, it could be a soft landing, meaning things slow down but don't completely collapse. Companies are still making profits, wages are still rising, and there's still demand in the economy. If inflation keeps cooling off and the Fed stops raising rates, we might actually avoid the worst-case scenario. But there's another camp of analysts who believe we're heading for a much bigger problem. If inflation remains sticky, the Fed may have to keep rates high longer than expected, which could crush the economy. If that happens, we could see a real bear market and a much deeper recession. So what does this mean for you as an investor? How can you protect your money and even take advantage of what's happening? First, stay calm. Market downturns are where the best investors make their money. When people panic, stocks go on sale. That's when long-term investors step in and scoop up high-quality assets at a discount. Second, have an emergency fund. If job losses increase, you want to make sure you have 3 to 6 months worth of cash saved up. That way, you're not forced to sell your investments at the worst possible time. Third, invest in quality companies. During economic downturns, strong businesses with real profits and cash flow tend to hold up better. Look at sectors like consumer staples, healthcare, and utilities, things people will always need, no matter what the economy is doing. And finally, look for opportunities. If the market drops, don't panic, think long-term. Some of the best buying opportunities in history have come during recessions. If you're patient and strategic, this could be your chance to build wealth while others are running scared. So is a recession coming? Honestly, no one knows for sure. But smart investors don't wait for perfect answers, they prepare for every scenario. The key is having a plan, staying level-headed, and focusing on the long term. Now, I want to hear from you. Do you think we're heading into a recession? Are you making any changes to your investment strategy? Let's talk about it in the comments below. And if you found this video helpful, make sure to subscribe to Wall Street Wisdom so you don't miss out on more investing insights and market updates. Hit that like button, turn on notifications, and I'll see you in the next one. Stay smart, stay patient, and as always, invest wisely.